you've done everything right. You've insured your tools, your stock, and your premises. But what about you, the individual that's responsible for the business? What protection is in place for your personal bank account when a legal claim lands on your desk? In this video, we'll explore a key type of protection designed for people behind the business. It's called management liability insurance. Coming up, you'll learn 3 important things that can help protect your personal finances as a business owner. First, we'll break down what management liability insurance actually is and how it differs from general liability or professional indemnity cover. Second, I'll show you the types of claims it typically protects against, including issues like unfair dismissal, employee fraud, or regulatory investigations from bodies like the ATO or Fair Work. And finally, we'll answer the big question every business owner considers. Is this cover relevant to you, and what are typical cost considerations? By the end, you'll understand how this policy is structured to protect not just your business, but the financial security of the people who run it. Now, I want to start with an analogy. Running a business is a lot like captaining a ship. You've got your crew, your team, your cargo, your stock and equipment, and you've insured it all properly. But here's what many people don't realize. If that ship hits a rough patch, say a staff dispute, a regulatory investigation, or an allegation that management made an improper decision, well, the insurance that protects the ship, which is the company in this case, doesn't always automatically protect the captain, being the director or the manager. When things get rough, the person steering the ship may be held personally accountable for decisions made on board. That is where management liability insurance steps in. It's the policy that specifically protects individuals in management and leadership roles. Now, before we get into understanding management liability or ML, a quick note. I'm an insurance broker and not a financial advisor or a lawyer. The information in this video is general advice only, and it does not consider your personal circumstances, goals, or needs. You must talk to a qualified insurance broker or financial advisor and potentially a legal professional to get advice that's specific to your business. All right, let's clear things up, because this is where the distinction matters most. That's your slips, trips, and property damage. If a customer slips on a wet floor and breaks their arm, that's typically a general liability claim. It covers physical risks, so think injuries, damage, and associated loss. Then you've got professional indemnity or PI. This one's relevant when your professional advice or service causes a client financial loss. If you give advice that is later claimed to be incorrect or negligent, then PI coverage kicks in. But what about management liability? Well, this one's different. It's not about what you do for your clients, it's about how you manage and govern your business. It protects the people making the decisions. Think about yourself, your managers, your fellow directors, from the potential personal risks that come with running a company. Every decision you make, who you hire, who you let go, how you handle compliance, safety, tax, all of this carries risk. If something goes wrong and if someone alleges that you did the wrong thing, then you may be held personally accountable. This potential personal exposure means that your own assets like savings, property, it could potentially be affected by the cost of defense or a final judgment if a claim is successful against you personally. This is not legal advice, but it is generally understood in Australia that directors and officers may face personal liability for certain statutory breaches. Think about failures to remit unpaid super or certain workplace health and safety violations. If your business is hit with a claim related to management decisions and the business itself cannot cover the extensive legal defense costs, then regulators or other claimants may seek to recover those costs from the individuals involved. And this is where ML kicks in, because it's designed to step in and cover those personal exposures so you don't have to. It can cover components like employee practices liability, claims like unfair dismissal, bullying, discrimination or harassment, statutory or regulatory investigations, so costs associated with inquiries from regulators like the likes of ATO, ASIC, Fair Work, D&O or directors and officers liability, so allegations of breach of duty or mismanagement, crime and fidelity, think financial losses due to employee theft or fraud, and also defense costs. And this is a big one in my eyes, because here it covers a significant legal cost of defending an action. Key here, even if the allegation is ultimately unfounded. So here's a simple way to think about it. General liability protects your business operations. Professional indemnity protects your work and advice. And management liability protects you, the people making the call. And that's a crucial difference that requires careful consideration. Now let's talk real world scenarios that trigger claims. This is where the protection becomes tangible. And claims often arise from events that small businesses never expect. I've personally seen clients successfully successfully defend against claims for unfair dismissal, but the legal advice of preparation, administration, this all came with significant time costs and financial costs, often tens of thousands of dollars. And another one that I've seen, a business faced a Fair Work investigation that had dragged on for months due to poor communication around a staff exit. There was no ill intent, but the process still demanded professional, legal, and advisory fees. These examples here are generally not from large corporations. They're from small to medium businesses just like yours. They are good operators, but things do happen. All it takes is one claim, one investigation, and suddenly your time, money, and peace of mind are on the line. And these are moments that ML is designed specifically to address. It's what helps to pay for your legal defense. It assists with settlements where necessary, and it helps keep your personal finances safe while you sort things out. Now, the next point I have catches a lot of business owners off guard. You set up a PTY Ltd company because you're advised it limits liability, separating the business finances from your personal finances. However, it's important to understand that in Australia, when you act as a director or a manager, you personally retain responsibility for adhering to specific statutory and corporate duties. There are many various situations under Australian law where a director can be held personally liable even if they operate within a company structure. As previously mentioned, matters like certain unpaid tax liabilities like PAYG or super under the ATO director penalty notice regime, or serious breaches of WHS, work health and safety laws, can potentially lead to personal liability for directors. You don't necessarily have to have committed an intentional fraud to face an investigation. That's a key point there. You might simply be the person whose name is on the paperwork or who had oversight over a process that's later challenged. Once a personal allegation is made, the individual named often has to bear the initial cost of their own legal defense. It's not the business footing the bill for your personal legal representation, it's you. And that's why ML is so important. It's there to protect you from the personal financial fallout of running your company. Because your company structure, while it's helpful, may not be a complete shield against personal allegations of mismanagement or statutory breaches. Now, you might be thinking, is this cover relevant to myself and what does it cost? Well, if you're responsible for making decisions that affect staff, finances, or regulatory compliance, it's definitely a cover worth discussing with a broker. The exposure exists whether you have 5 staff or 50. Once you manage people, payroll, high-level compliance, you're essentially carrying management risk. Now, many small business owners assume that they're too small for this risk. However, often, and most of the time, it's the smaller businesses that don't have the resources or have not hired dedicated HR or legal departments to watch their backs, meaning that errors, misunderstandings, or administrative oversights, they're more likely to occur. Now, regarding cost, this is general information and highly variable, but depending on your business structure, industry, revenue, claims history, management liability, insurance can begin from around $1,000 annually. Now, it's essential to get a specific quote and coverage advice from a licensed insurance broker who can tailor the policy to your specific circumstances and your industry. But when you compare the cost to the potential legal defense bills, which can quickly climb into the tens of thousands of dollars, it offers significant protection for what is often a manageable premium. Ultimately, it's not mandatory, but for business owners seeking to protect their personal finances, it's 100% a policy that's worth looking into. Look, business owners already juggle enough staff, customers, compliance, and cash flow. The last thing you need is to lose sleep wondering if one management decision could undo everything that you've built. That's really what management liability insurance offers. It's about having confidence, knowing that if something unexpected happens, you've got a safety net that protects the people who built the business as much as the business itself. Now, remember, my goal here is to help you understand your risks. This is general information only, not a recommendation to buy or to drop any specific policy. Always consult a qualified insurance professional to tailor your coverage.